So, when you think about the busiest time for the housing market, what comes to mind? Probably not December, right? I mean, that's for holidays and family, not for house hunting. But what if I told you that this quiet, often ignored month actually holds the secret to predicting the housing market for the near future, maybe even for 2026?
It's a fair question, and it's what we've all been taught to believe. Spring is when everyone's buying, summer is for moving in, and December, well, that's just the sleepy off season. But is that really true anymore?
And for a long, long time, you would have been absolutely right. December was the market's downtime. Analysts pretty much just tossed out the data from this time of year, figuring it was all skewed by the holidays and didn't really mean anything. That in this post-COVID world we're living in, things have gotten, well, weird. They've changed dramatically. That quiet little month has gone from being an afterthought to something way more powerful. It's basically become a crystal ball for the all-important spring selling season. Okay, so let's start with that old myth, just so we understand why it was a rule for so long. For years, it was simple. December had the lowest seasonal demand for housing. Period. Because of the holidays, the numbers always looked like a weird outlier, a little blip on the radar. Everyone just assumed the real market action wouldn't kick off until January. And then 2020 happened. And this is where the story gets really, really interesting. The old rulebook, it got thrown right out the window. A totally new pattern started to emerge, and it's forcing all of us to rethink everything we thought we knew about housing seasonality. I mean, just look at this difference here. Before, all the analysts would wait until that second week of January to get their first real look at the market. But now, that predictive data is showing up way earlier. We're actually seeing what's called a strong seasonal push starting in November and December, and that gives us this crucial early signal. But look, theory is one thing. Let's talk about the proof. The most powerful evidence for this new reality actually comes from something super recent and incredibly dramatic, the housing market crash of 2022. This is the case study that really proves the whole December crystal ball idea. And I'm not exaggerating. The housing analyst Logan Mohtashami, whose work this whole explainer is based on, called it, and I'm quoting here, the most significant and fastest home sales crash ever. This wasn't some gentle slowdown, folks. This was like driving off a cliff. But here is the absolute key takeaway. This epic crash didn't just pop up out of nowhere in the spring of 2023. No way. The warning signs, the red flags, they were all flashing bright red in the data from November and December of 2022. The December crystal ball was working. You just had to know to look at it. So how do we take this history lesson and actually use it? Now that we know December is sending out these signals, what exactly should we be watching for this year to get a read on the 2026 market? This is where the past really does inform the future. It all boils down to this one key concept: forward-looking seasonal demand. To put it simply, all that buyer interest that we used to see pop up in January, well, it's showing up in late fall now. It's like getting a sneak preview of the market's energy before the new year even begins. Okay, let's make this super practical. You don't need some complex economic model to see these signals for yourself. They're just a few key data points. They're all publicly available that'll show you which way the wind is blowing. It's like having your very own crystal ball. So here's your toolkit. First, you've got to track the weekly purchase application data. That's basically just people who are actively applying for mortgages to buy a house. Second, you want to gauge the strength of that seasonal push we talked about. Is it kind of weak, or is it surprisingly strong? And finally, here's the real stress test. How does all this demand hold up when mortgage rates are high? Because let me tell you, strong demand when rates are high, that is a very powerful signal for the year ahead. Which kind of leaves us with this wild, provocative final thought. If the data from what's supposed to be the year's slowest period now predicts its busiest, has the holiday season somehow, quietly, become the single most important time of year for housing? It's a massive shift in how we think about the market, and honestly, based on the data, it's a question we really can't afford to ignore anymore.